Hello, welcome to the last session of 2023. Thank you. I will say the last and the most exciting. I've never been so excited for anything in my life. This has been a long time coming, and I have to say MA Financial has been wonderful to work with in making this happen. Incredibly patient in getting the right processes set up and very accommodating in seeing a genuine opportunity in terms of early stage startups and the gap in funding that is currently present. So for everyone watching at home, and I know there'll be a lot of people, this is a new mechanism called the UTS Startups Growth Funding Program. We went through a few different versions. And it's designed to fill that gap that we used to have a lot of accelerators, especially around Sydney. The pandemic hasn't been kind in terms of corporate innovation budgets and general accelerators, and angel networks investing in those early stage, high potential opportunities. And this is a solution to that, to say, let's build a watering hole where the best startups will come together. We'll meet the best investors, and we'll have what I think is the best process to quickly get to that first funding. I've been told not to say first check, because apparently that's an old person thing, but the first check that then allows them to prove out what they're doing, grow their customers, and build into something much more interesting, and eventually build a more interesting pool of these high growth, interesting companies as well. So I want to thank MA Financial for making this possible, and it is the start of what I hope is a wonderful partnership that can grow from here, but you're going to hear more in a second. I'm going to pause there and introduce someone very special. My boss, Glenn Whitewick, the DVC Enterprise for UTS. Please make him welcome. Glenn.
Thanks, Murray. Very kind, and apologise for my casual outfit, but it's my last day before I'm going on holiday. And we had a bit of a Christmas dinner or lunch in the Chancery, and I had 3 serves of ham and a whole bunch of stuff. So if I fall asleep while I'm talking, it's probably because I ate too much at lunchtime. To start, I'd like to acknowledge the Gadigal people of the Eora Nation, upon whose ancestral lands our campus stands, recognising them as traditional custodians of knowledge for this place. I'd like to welcome everybody here today, particularly colleagues from MA Financial, Andrew Martin, who's in the front row here, our UTS startups who are here with us today, and of course our colleagues from across UTS. Over the course of the last 5 years, we've gone at UTS from having some really wonderful and interesting startup programs to now creating the largest cohort of startups I think we have in the country. And I give Murray, as you all know, an enormous amount of credit for building that capability. 5 years ago, when we sort of talked to our students, what we discovered was there was enormous appetite for creating, either working in a startup or creating new startups. And so rather than having a whole range of different programs, we brought all that together. We had a very imaginative name and called it UTS Startups. And today we've grown that to a cohort of 771 active student-led startups here at UTS. And as I said, I think that's pretty much the biggest concentration of startups in the country, certainly the largest cohort of startups in any of the universities. I won't go on about statistics, but we've been keeping track of all of our startups with their permission over a period of time. Out of that 771, I think we have about 35% are female founders or female engaged in the startups, which is fantastic. That's not 50%, which is where we'd like it to be, but it's higher than the average across the sector. And we've also been doing a lot of work in the last 12 months to bring high degree research or PhD students at the university into the startup community, and now I think about 95 of those 771 startups have got PhDs engaged in them. So from our perspective, our startup community is going gangbusters. But as Murray said, we've seen a significant decline because of the pandemic in a number of accelerators and incubators around the landscape. And again, as Murray has pointed out, there is a good amount of venture capital around in Australia, but it's not connecting, as far as we can see, early enough into the startup cycle. So that's why we're absolutely delighted to be working with MA Financial, who have been a fantastic partner with us to establish this UTS Startups Growth Funding Program. We're not planning to be part of the transactions that are involved. That we don't see that at this point as our role. might change in the future. What we want to do is bring our wonderful startups to really interesting companies to get their support to help them grow and scale their business. MI Financial and Gild Group, and Gild were the organisation that helped prepare the founding documents here, and they've done a fantastic job, have both been exceptional to work with, and we're working to build this into a meaningful relationship where the best startups continue to come together with the best inventors generating the best results for Australia, for our community and everyone involved. We'll be running this capability or this program every quarter from here, and we look forward to seeing us all again in March. I think that's the next round. So if you're a startup working with a current or a past UTS student on your founding team, make sure you join UTS Startups before the next batch to be in the running for the next round of the program. I'd now like to thank and welcome Andrew Martin. Andrew is the Managing Director and Head of MA Asset Management. I met Andrew recently at a wonderful art fair event that MA Financial supports, and not only are they providing support to us in the startup community, they put their money where their mouth and are also supporting the art sector here in Australia, which is fantastic. As Murray indicated, MA Financial have been fantastic to work with here. We're delighted to be partnering with them, and would like now to introduce Andrew to say a few words.
Thank you very much, Deputy Vice-Chancellor, distinguished guests, ladies and gentlemen. We at MA Financial are very proud to have supported the creation of the UTS Startup Growth Funding Initiative, with its mission of course, of providing startups with capital and mentoring support. For those who don't know us, MA Financial is a diversified financial services firm that's listed on the ASX. In short, we do three things. We invest, we lend, and we advise. We currently manage over $9.2 billion on behalf of high net wealth investors and institutions from all over the world. In fact, we have investors from 32 different countries. An important part of our business is to support small to medium Australian businesses with growth capital. Across our entire business, we have provided literally billions of dollars of capital to hundreds of tech and other startup and small to medium businesses. This capital has helped these companies grow and accelerate, and we've helped create thousands of new jobs, which we're very proud of. We're really excited to have had the opportunity of supporting and funding this important initiative to provide capital to early stage startups. As we all know, Australia lags the world in VC funding, and we're hopeful this initiative will help fill the gap. I'd like to express our sincere thanks to those who have helped launch this project, and there have been many. Many of you have been involved. I'd like to call out particularly Zane from the New South Wales Government, who introduced UTS to us. So thank you to Zane for being our matchmaker. And of course to Murray Herbst, who's led this project with incredible passion and commitment. Murray, well done. I'd also like to thank the Commonwealth and state governments. The MA capital to the startup program has been raised from entrepreneurial migrants under the government's investment migration program. Part of that program, the Significant Investor Visa program, has delivered over $40 billion of capital, long-term, much-needed capital into the Australian economy to support small to medium businesses. In other words, new overseas entrepreneur migrants are helping fund local migrants. As you may know, the government this week released its migration strategy, and we note that the government plans to introduce a new talent and innovation visa, which I know the VC community is very excited about and confident will deliver further talent and capital to Australia. So again, we are at MA super proud to have been involved, and we'd like to congratulate you and your team, Murray, on an outstanding initiative. I know a lot of people have been working hard on assessing the first round of businesses, and I take all the glory up here, and there's been a lot of work with Jaron, his team, and Murray and your team, but I'd like Sean to come forward. Sean is the inaugural winner of the startup funding with his business Visual. So congratulations, Sean. We have something here for you. Oh, here he is. So in acknowledgement of your outstanding efforts, and we're very proud to be supporting you at this important juncture of your development. So congratulations, Sean.
Thank you very much.
Cheers.
Thanks so much, Andrew. Now, Anna, I'm going to welcome Anna to the stage, please, because who cares about UTS startups? Okay, thank you for your support, but the real thing to care about, and what I care about, is the wonderful people that we get to work with, and Anna is amongst the most wonderful of them. And if you haven't heard before, because I'm not sure how willing you'll be to pitch what you do right here, but the best indoor mapping solution, like move over Google Maps and everything else, this will be the solution for navigating indoors, and for people with a disability, and for a lot of other solutions as well. Thank you so much, Anna, to bring us forward. Thank you very much.
Oh, thanks, Murray. So I am moderating the panel that we're having. So I'd like to invite our panellists up to the stage, if we're going to call it that. So Jaron, if you wouldn't mind coming up. Brad and Sean Marshall, please. Thank you. So we've got 2 mics. Do we need to move this mouse? Right, thank you. Do you have enough room? We can spread out a little bit. It's always wearing silk pants a bit dangerous sitting up on these things. All right, so I might start by just asking you each to briefly introduce yourselves, and I might start with Jaron. I can give you mine.
Lovely, thank you. My name's Jaron Ewan. I look after a team of people called MA Growth Ventures, and the team's been involved in we're involved in supporting growth stage companies across Australia. We've invested in about over 40 of them over the past 8 years. Invested over $500 million in growth stage companies. There's a team of 9 of us, some of them sitting in the room here, that have been involved in the program.
Probably going to need one, to be honest.
Okay.
Yep. Hi everyone, I'm Brad Moran. I am a founder who recently had an exit and was funded by the MA Ventures team. I spent 13 years in 2 startups, so I've got a good level of, let's say, experience in the startup sector. Had an exit 2 years ago to a big French group called Publicis Group, and are currently working with the MA Growth Ventures team on trying to select and procure the newest generation of startups.
Thanks. I'm Sean Marshall, from the CEO of Visual, one of those new startups, and just really grateful to be here. We work on smart city solutions using video AI and other methods to collect data for governments about how people move around in the world. How they catch taxis, how they walk, how they cycle, and help to use that data to change the way our cities work.
You can hold on to that. So is this mic working? Yes. Yep, great. So Jaron, I'm going to ask you, you're my first victim. So can you talk to us a little bit about how this initiative came about and what you hope to achieve with it when you first started it?
Well, I guess it predates me, but I guess I see myself as a bit of a link in a long chain. Probably the only persevering part of that chain is Murray from the start all the way to today. So, and look, I think throughout our organisation, MA Financial, Enda is here and has formed that connection initially. I think I met Murray maybe 18 months ago, and I guess I was infected by his passion. And his enthusiasm, but he also very eloquently described the issues around the lack of funding in early stage. Look, to be fair, we are a little bit later stage typically in our investment cycle, but for us, it's not a great time to be an early stage company starting. It's hard to get capital, so I guess our vision collectively is to really keep the wheels of innovation and entrepreneurship going, so that we will continue as an ecosystem to have companies to invest in and support.
That's great. So can you let us know just a little bit about the MA Growth Ventures, the team, and talk about what you've done as a team over the last few years?
Yeah, look, I guess I introduced at the start what we do, really supporting Australian businesses with growth capital. It's as simple as that. We typically invest anywhere between $1 and $20 or more million in each of the companies we support. I guess over the last few years, the main, focus, the last few years has been quite interesting. We've had sort of two periods in the last few years. You had the inflection point that happened sort of late 2021. Before that, there was the exuberance, and that you inflected from exuberance to a degree of pessimism, where that capital has sort of dissipated from the industry. A lot of it has anyway. So in terms of what we've been doing, I'd say probably the last 2 years, we've continued to invest. I guess we've got the good fortune of a lot of the capital that comes into our funds through the migration program that Andrew talked about. So we've been able to continue to deploy capital throughout this period. I think we've done about $100 million of investment in 8 new companies in our portfolio over that period. What else? And obviously, like other VCs in the space, have continued to support existing companies in our portfolio. It's really a tough world at the moment out there, especially whatever stage of the ecosystem you're at, whether it's early or late stage, to continue to grow and do that with capital.
Well, I think that throws nicely to my question to Brad. So what would they like to work with? I'm sure that's what every startup wants to know about.
It's a loaded question if I've heard one.
Yeah, shush. That everybody from MA
Andrew is the
Closure
boss.
is.
Where do I start with Australian VCs and my experience with MA Ventures? Well, I'm never nice about them, to be honest, because I'm what they call a realist. And unfortunately, no one likes to listen to those these days. But no, look, I think for me, my experience with MA was that with what a founder at my position needed at the time. So we were nearly 3 years into my second startup. We knew what we wanted to do. We knew we had a good plan. We had revenue, and we were we needed the cash, but we didn't want an overly hand-holding investor. And that's exactly what MA Growth were. They were smart enough to see the opportunity and back the jockey more so than the horse, even though I like to think we had a combination of both. But at the end of the day, Will and Jaron and the team, they all put their own money into my business as well. So it's not just the fund's money. So these people are actually putting their hard-earned into companies that they invest in. So not that puts more pressure on me, but you go to sleep every night thinking, should I give myself a pay rise? No, directors won't allow that. But I think for me, just from a pragmatic point of view, to answer your question, what were MA Growth like to deal with? I think they're very easy to deal with in that sense. So if you run into trouble, they're there to help, not slaughter. They were always complimentary on how can you grow faster? What do you need to make this work, as opposed to saying, well, we're only prepared to deploy X. More of the inviting questions that founders need. And then if founders are self-sufficient, which some are, some aren't, some are still, I was probably 10 years into my career by the time I chatted to Will and Jaron and Richard. And so they knew that I was a founder that was pretty headstrong, that I kind of knew what I wanted to achieve. Not that I didn't want to get them out the way, but they knew, well, we just need to support Brad, give him what he needs, give the company what it needs, and it will flourish. And, what was it? A year on to the day, we exited for a couple of $100 million. Got you a nice 7 or 8 time return. There you go. Hey. You did better than I did. It's true. In terms of the ecosystem in general, and to talk a little bit about the type of capital that they use, and particularly the migration capital, I think it goes to a much broader ecosystem deficiency that we have in Australia. And after spending a couple of years looking at startups and wanting to fund startups myself, and having spent 12 years trying to pound the pavement raising cash and doing 19 rounds of capital, which is very exhausting, as you can hear in my voice now, more or less are the easiest ones. I think that venture often in Australia is very misunderstood in terms of what investors want and what startups need. And I can tell you, before I spoke to MA Growth, I went through the American startup system, spoke to lots of VCs over there. We probably spent 6 months in Australia with all the VCs here pitching our product, and we thought that we ticked a lot of the boxes. We were post-revenue, so we were doing almost $3 million a year in revenue. We had a sticky product. We were B2B, we were international, we had clients, and we thought, well, if anyone's going to tick a box, it's us. And it was hard rejection after hard rejection. And to the point where most good founders will go and face their hard rejection and say, well, why? And a lot of the feedback was that we just didn't fit what they were looking for. And what it came down to was the multiplier. And so they ran across our numbers, which I thought we were relatively good at doing, and they couldn't see a 10x. Now, even one of the firms, I won't name who it is, said, look, we can see easily a 5x on this business, but we're not going to invest in it based on that. And so what I think...
Did you get 10x?
We got 7 point something, I think. Depends what numbers you look at. But I still think it's not a reasonable return, right, for a year's worth of work. But coming back to the original point, I think that the void that MA Growth fill, and particularly the migrant visa helps to fill, is what I call practical capital, which is MA Growth were happy to take the punt on something that they could see 3 to 4 times on. And I call it backing horses versus unicorns, right? So Australia and the world in general is just so obsessed on creating the next unicorn because it's on the front page of the papers and everyone gets the PR. And meanwhile, MA Growth are quietly creating lots of nice horses and backing lots of them. And I think Australia needs more of that. So that needs a bit of a reset from the VC community, a bit of a reset from the startup founders, maybe perhaps not having aspirations to be a billionaire because you just don't need to be. And I think if there's a degree of sensibility in the whole program, I think that the MA Growth Ventures brings that, because quite frankly, I'm not saying the only reason they funded us was because of the multiples, but a lot of the hard rejection we got from Australia and the world was because our multiples weren't high enough. And so I think that the fund itself brings a degree of pragmatism. And to be honest, if we hadn't have got the funding, 3 months later, we would have been dead. So, it was as clear cut as that. So that's what they did for us.
That's well done.
Yeah, and the 7x to go with it.
And the 7x.
Yeah.
So I suppose we're talking to a lot of very early stage founders here. And my next question is about your career and blah, blah, blah. But I'm going to change it, and I'm going to ask you, looking back to your 2 times of being an early stage founder, what is maybe 1 or 2 things that you wouldn't do now with what you know? So what is 1 or 2 of your bigger mistakes that you're going to share with us, maybe?
Well, that wasn't in the run sheet, so
The question is,
I don't make mistakes.
your career
ever.
to date and the lessons you learned.
Yeah. Well, look, I think that, not that I don't agree with the question, but I think as a founder, you have to make lots of mistakes and quickly. And you have to be not afraid of rejection and failure. And every startup will tell you it's really hard to raise money, and I keep pitching to VCs. And I say, well, what stage are you at? Pre-revenue. Well, the VCs aren't your market, really. You need to go find high net worth individuals. And I think early days for me, one of the mistakes I made was falling into that trap as well. So I'd go around and I'd spend time pitching to businesses, enterprises, corporates about the business. And I quickly learnt that it was high net worth individuals that will back early stage, and there's a certain theory I have on how to get early stage investors on board. But I think I learnt very, very quickly as well that the startup is maybe 10% about your product and 90% about your people skills. And so your ability to convince an investor to invest in you probably takes 7 or 8 meetings just to get them interested in you. Do they trust you? Are they willing to part with their money for you? And that goes for your customers, your staff. And the stark difference between, say, my first startup, my second startup was, people say, well, what's your superpower? Well, the superpower I developed over time was, pardon my French, but I learned a bit of French after being acquired by them. is that, under huge amounts of pressure, the ability not to lose your shit every day is your superpower. And when you're constantly faced with rejection in your first startup, you tend to maybe let a little bit seep out, just a little bit. And then as you get more conditioned to the startup world, as a founder and as a CEO, people look to you as the energy, as how's the business going? They can tell the bank balance just by looking in your eyes, So, when people say to you, how are we going cash-wise? Well, we're fine, all right, we're all good. You're covering payroll for 2 weeks. So, in terms of mistakes, look, I made thousands, and would I do them all again? Sure, because you have to learn the hard way sometimes. But part of what we're bringing back to the startup community now is not just cash; it's IP, which I think is obviously one of the biggest disconnects too. Is that the intellectual property that founders who have been successful, and I'm not successful because of the money that we made, I'm successful because of the 11 and a half years of mistakes I made that I learned from, that I can now share with other founders to say, don't do that, don't do that, don't do that, rather than do this, So I know less about doing that and more about don't do this, and then it's a game of percentages really, is all it is. So I'm not sure if that answered your question on top mistakes.
No, I think that's great. But I'm going to ask then for both you, Jaron and Brad. You were the ones from this run sheet that you were the ones that were interviewing the companies from the UTS startups. So the question is, what advice would you like to give now to some of those companies, or what did they do well? What did they not do so well?
Yeah, I'll start, and I've only got a couple of things to say. So look, pitching your product and your business in 5 minutes is very difficult, but that's part of the challenge. So in any part of business, whether it's your employees, your investors, your customers, you have to know your audience. And so by knowing your audience, what that means is knowing that we know nothing about pipeware or sticking cameras in a pipe, or we know nothing about the logistics industry. You have to assume that your investors know nothing about your space. And in 2 simple slides, you need to dumb it down so that the people in the front row who you've got only 5 minutes with very, very quickly understand the problem that you're solving in a very, very relatable way. So even if it's astrophysics, you've got to give an example that they would understand. So, imagine, a car instead of a spaceship, paint the problem, paint why it's a problem, how much of a problem it is, and then how you've solved it. And really between those 2 slides, the investors are then spending the next 4 minutes thinking about, okay, what are they like? What's the team like? I've got some questions coming, rather than spending the next 4 minutes thinking, I'm still not quite sure what they do. So I think that's why they call it the elevator pitch, right? You got 20 seconds to really nail what you do, and in an elevator you don't get a specialist, you get someone who's very general, but that's part of the skill of selling, is that you need to dumb your sales pitch down so low that anyone can understand it. So even people like Jaron, But it's funny because I went home and my son was really interested. He's only 9, but he watches Shark Tank. And he said, Dad, tell me about the 6 businesses. And I told him about the 6. And he had almost exactly the same reactions that I did. And nearly all of the reactions were, I need to know more about the problem. Like, what problem are they really solving here? I'm like, that's interesting for a 9-year-old. Andrew is...
Muzz, you can run some pitch testing against 6-year-olds, 9-year-olds, 12-year-olds. Yeah.
Yeah, it wouldn't be the worst idea.
Look, I've got a lot of admiration for founders to get up on stage and try to distill their heart and soul of how many hours they're spending on a problem into 5 minutes to communicate with someone that has no idea about their problem. So I think it's a really hard thing to do. Like we typically meet investors for a minimum of an hour. So doing a bit of a pitch session where you've got 5 minutes to show your wares and 15 minutes for Q&A is a really tough format. But as Brad says, you're going to have to use the same skills when you're going to pitch on an elevator for whoever corporate or whatever you're going to try and sell to. So knowing your audience is super important. But look, it's hard to be critical. I mean, we should be as much critical about ourselves as trying to find the right format. We always typically get books in advance rather than seeing it for the first time on the day, so that we can process in our own minds what are the issues, what are the questions that we want to ask. So I think, it's a great format, it's a great idea, and it's a great process. We can improve as well. I think it's across the board. So, but no, really impressed with the pictures yesterday.
That's awesome. So there's been talk, Jaron.
I was the backup at the pitch festival.
Oh, were you? All right, so you're running straight out the door at the end. Okay. So this Talent and Innovation Visa, can you tell us a little bit more about that? I must admit, this is the first that I've heard of it as being part of this funding. But what does this capital mean for Australian startups and the ecosystem?
I don't think many of us know exactly what it means because it was only announced a couple of days ago. But I think there has been a policy in the past where migrants coming to Australia come through a certain stream where they have to invest a certain amount into early stage companies, into startups. And that's where I would say the majority of the funding comes from that we're able to deploy into businesses like Citrus that we're putting into Visual. So why is it important? I think probably undeniably there's not enough capital in the space. It's not like we're not seeing enough great founders. It's not like we're seeing not enough great innovative companies. It's capital constraint. That's what it is. So any pathway which generates more capital to the space, whichever pathway, is a good thing. And linking it to migration is a great thing as well. I think the second thing about why it's important and why I'm looking forward to seeing the results of that, and hopefully it's a larger allocation to ventures, and we hope you'll support that too, is that it's all season capital. It's not like at the moment the global financial markets are terrible and there is no money for growth at the moment. Investors are scared. And what we need is this constant hum of capital that comes through, not because businesses like Visual, your capital needs aren't driven by the global financial markets, it's by customer, it's by product development, it's all those good things that you're doing day to day, not by what the externalities are happening upon you. So I think the nice thing about a program like that is that it's disconnected in some ways to financial markets and they can get that steady hum going. And that's what we'd like to see. So I think they're probably the two main things that I think are the positive aspects of hopefully what that program will land on.
It's really interesting. Like I said, I hadn't heard of it. So this is just a question off book, this is my question. Because you were talking about the difference between 10x back to 5x, 7x, things like that. Does this type of funding then give you more flexibility compared to LPs?
There's such a heterogeneous mix of investors that are out there, and they all expect different things. They're all looking for different things. I guess like your typical high net worth investor or a family office is really looking for an earlier stage significant win. VC funds typically are looking for significant wins because it's great for their branding, it's great for generating that next dollar of capital that comes in. So it means that I have to go take big bets. But what the ecosystem needs is constant capital that comes through. And so when we think about, rather than thinking about 10x or 5x or 50x or whatever, it's a case of, is the business a good business? Is it a good idea? Is it going to succeed? Rather than trying to do moonshots all the time, it's what are the fundamentals of a good business? And what are the ingredients for success of that? And so I think we like to detach ourselves from the marketing hype because the marketing hype is not necessarily what's going to succeed from a migration standpoint. It's the fundamentals of the business. And so it allows us to go back to the fundamentals of whether Visual will succeed based upon the experience of the founders and their product market fit and that sort of pathway, rather than just going for big moonshots. Does that make sense?
Yeah, absolutely. So Sean, I've been leaving you alone. It's your turn.
Been quite happy sitting here listening.
No, it's been really interesting. So tell us about your business, tell us about the experience of the pitch, and tell us it all.
So as I said, we work with data collection around mobility data for governments. So there's a lot of manual processes, a lot of assumptions, extrapolations in how town planning works, for instance, or how do you decide whether to build a new cycleway, or whether your taxi ranks are getting fully utilised, your parking lots. So there's great new technologies that are coming out to the market that can be used to solve these questions, and that's the space that we're going after. So I think for us, this opportunity, we've known we should be raising capital for the last 6 months, but it's, we're busy with the clients we've got, right? We've got so much work on. We're so busy, but to be able to spend the time to nail the pitch and get it right, to figure out who we can talk to get the first terms online, so you can go do all of those many coffees and conversations required to actually raise a round. It needed a jump start for us to kind of get us along the way. So the really intensive program from UTS on getting our pitch up to where it is definitely came a long way. I'm glad you guys didn't see the first one. That was just awesome for us to kind of get to a level where we can really clearly articulate what it is that we're doing, and now to be able to say, hey, we've got this great company behind us, and to be able to take that out to the market and use that as a signal, hopefully. I think that's just such an empowering thing for us to be able to move fast and really make sure we've got the capital to do this properly, do this quickly, and take the opportunity that's ahead of us.
It's awesome. Can't wait to see where you end up in another couple of one year. Maybe.
2 years in already, so.
Another 10 to go.
Have we got time for questions, maybe, Maz? Or
Yes. Any other questions that you'd like to ask?
I don't think that's the end of my list.
Thanks so much, Anna. That was incredible. Round of applause, please, for Anna and our guests. Okay. I think we've run out of cameras. I'll do an awkward angle down there. I'll just say to finish up, we will be running this every quarter. And for everyone watching at home and everyone here, this, I think, will build into a truly interesting opportunity for, like I said, the best startups to come together with the best investors on a wonderful process, on good terms, and that kind of pipeline that will build quality on both sides, I think will end up being really, really interesting. So the first of many, but congratulations, Sean. I'm, like Anna, very excited to see what comes next. And I'll do 2 quick shout outs. Startups, if you are interested, please join UTS Startups and we'll explain the rest. Investors, if you are interested in joining MA and working to support this gap in the market and build a lot of capacity that will then feed into a lot more interesting investment opportunities, please email us. You'll be able to find our details, but it's startups@uts.edu.au or this LinkedIn. We'll end there. But a giant round of applause, please, for our panel and for MA Financial. Thank you very much.